All right, guys. So, um, this is going to be a back testing session, right? I'm just going to be back testing ranges and showing you guys how I trade with range. All right. So, mm, all right. So, talking about ranges, right? I want to just trade ranges. So I'm going to be back testing just ranges. And let me just get my indicator set up. Uh, let's go to this one. Yes. All right. So this is the 4 hour time frame, right? And I'm just going to be trading just ranges. I'm just going to be back testing ranges. This is May 2023, right? So this is the beginning of, I believe this is the beginning of the week. Yeah, I believe this is the beginning of a week, Tuesday, Wednesday, Thursday, and then Friday. So inside each box like this is the beginning of a week, right? So now we're just going to trade ranges. So this is how I see ranges. This is a higher low, right? And then this is a higher high, and then this is a higher low, right? But this higher low fades to create a higher high because as you can see, price did not close above that range. So now on the lower time frame, the ranges on the lower time frame, this is a lower low, right? And this is a lower high. And so price broke this structure right here. You know, price failed to break the structure and was retracing down, came back into this zone and then broke back bullish, right? And so after price broke back bullish, it came back into this higher low zone, right? As you can see, this one swept liquidity, right? Total soup came back into this one. We have our CROT low, CROT high, and then price pumped up. But regardless of CROT highs and lows, like I just want to talk about trade ranges today. So this is the range low, right? So now price has created another higher low, and now it has created is about to create a new higher high, right? So now since we've gotten our range, this is going to be our range. Now this is our new higher low, and this is our assumed higher high. But in order for us to know that this is a confirmed higher high, we have to go to the 15-minute time frame to look for break of structure. So on the 15-minute time frame, we already have our higher low right here, right? So now we're looking for break of structure on 15-minute time frame that we can get a good entry for to sell, right? Mm, I'm just looking for ranges. We have this lower low, we have this lower high, we have this lower low, and we have this lower high. We have this break, right? So um price has not come into this higher low to test. It created a lower low, it came here and then created a new high, but it didn't come anywhere. So we'll take an entry. I can take an entry from here, weekly highs. Stop loss will just be above these highs because this is also a range. This is a lower low and this is a lower high, right? So lower low, lower high, lower low, lower high. So instead of putting my stop loss here, I want to put it above this range, right? So that's good enough for me. And then my risk to reward is 1 to 2.5. All right. So now why am I selling? I'm selling because the the way a range moves is where bullish market raise higher high. Inside of this higher high on the 15-minute time frame, the market is going to break structure and then sell down to the higher low to then continue the bullish trend, right? So you only want to be selling when the market is creating a higher high to at least 50% of the range between the higher low to the higher high, right? Because anywhere around the 50% and 60% on the 15-minute time frame, the market might break again and then continue the bullish trend, right? So using our feeds, I would measure from these lows to these highs. This is our range, right? This is our range. And so anywhere before all of these zones, I want to already get out of the trade. This is 50%, this is 60%. So anywhere in these zones, I want to already get out of the trade if the trade activates me for a sell. Now let's see. Here we're active. I think this is the beginning of a new month, Monday, May 3rd, because this was on Friday. So this was on Friday, right? And now this is Monday. So let's see. And that's it for the first trade. We are out of this position. That's it. We're out of this position. And so let's see if the right now the 15 minutes trend is bearish, but we are waiting for it to come into the zone because this is a higher time frame, higher low, right? Here we want to buy from. Right. So you can see the market just kept falling down. This could have easily been a 1 to 4, right? But so even a 1 to 3 risk to reward ratio was very, very good on this position, even a 1 to 3, right? And then price pulled back and then broke again. So now all we're looking for now, we're just looking for this bearish trend that is coming down to change into a bullish trend in any of these zones, and then we're going to buy. Okay. So all we have to do is just mark our ranges. So let's mark our ranges again. We have this lower low and it's coming from this lower high, right? So now before we can buy, price has to be trading above these highs. That's the rule. You understand? That's just the rule. Right now we can see price creating this low, breaking this zone, creating a higher high, but we don't know if it wants to if it's going to get here, but it has shown us sign that, okay, now I want to pull back into the zone. You see? So you see, now just by breaking this structure, like I said, it's showing us sign it wants to come into this lower high. So what did he do? If this is your higher low, what did he do? You buy from here, it comes back to the higher low of the trend. And as you can see, it did not break the structure, right? Immediately it came back, it shot up immediately, so new higher low, breaking this structure right here, right? Creating a new higher high, coming back, sweeping liquidity, imbalance, and continuation. But now, um, so now since it creates a new higher high, now it has created a higher low. I'm gonna use this as the higher low that created the higher low that created a new higher high. So now that we are bullish, if this price continues being bullish and breaks above this higher low, lower high, then we will be bullish. But if this zone comes into anywhere, if it comes into this range, if it comes into this range and it cannot break it, and instead it breaks threshold, then we'll continue to sell and then brings price further down into this higher low to come and test, more demand level. It just means that sellers are still in charge. So let's see. Now we are looking for breaking structure, anticipating breaking structure in any range. And as you can also see, I haven't gone to the 4 hours since I got this range low and high, right? I am just on the 15-minute trading, right? I haven't gone anywhere else. I just saw this imbalance right now. Very, very clean. Very, very nice. Very, very nice. Yeah. So just to let you know, this is our range low. Just to let you know, these are our range low and this is our range high. So if price breaks this low, we are bearish. If it breaks this high, we're bullish from this higher low. Okay. So you see, price fade to what? To create this high, to create a higher high or even create this low. But now we have a break of structure here. So now wherever this low is going to come from, right? Doesn't matter. This is going to be a lower high and price is going to create a higher low right now. Do you understand? So um I would want to buy from this imbalance if price comes into this imbalance. I want to sell, sorry, I want to sell because price is still very, very bearish. And as you can see, if you had held this trade, it would just continue melting. But my risk to reward is a 1 to 2.5. And there's a reason for that, right? There's a reason for that. But then again, price until price breaks this low, we are not bearish, right? But we can be looking for price to come into this zone to sell. If price breaks this low, then we want to sell from this zone. So let's see. Okay, price is already pulling back, rejecting from this break of structure zone. Um, okay. So now we have a lower low, right? We have a lower low, we have a lower high. But then again, we have a range. We have this range forming inside of here right now. We have this low and we have this high. So these highs and this low. This is a range forming now again, right? Don't forget we are still in the higher low. So if it gives us a very good buy scenario, why not? We'll definitely take it. And yeah, to push price to come and continue going further up. Because don't forget we are bullish until price breaks this zone, we're bullish. So now it's giving us another range. Let's see. Okay, so now what happened now? Now price has closed below this range, so that means it has broken this range. So now I can sell from here. I can sell from here, stop loss just above these highs, right? Because now it has given me confirmation, sign of weakness that it wants to go below this range, and then the next range I'll be, looking for it to come back into is this higher low. This is a higher low right here, so I want price to come into this range. So. I can be looking at this liquidity imbalance right here, right? Yeah. So normally I like to use the daily entry as an entry and then my stop loss just above the high. But as you can see, the stop loss is 17 pips. Let's say 1 to 2.5. 1 to 2.5. Okay. Okay, not bad. Not bad. All right. If not, I would have just used this other block right here. I think this would have given a uh, because now I can just put my stop, put a little gap on my stop loss. 1 is to 2.5. All right, let's see how this plays out. This is Tuesday, and now this is Wednesday. Yeah, this is Wednesday. Price is active, and trade is active, and the stop shows that. All right, that's cool. Um, we just clear out the drawings, go back to 1 hour, and let's see. Go back to 4 hour. 4 hour is the higher time frame, not 1 hour. I think that was a 1 hour. Right. All right. So coming back to the 4 hour is the range we use, not 1 hour. Sorry about that. So on 4 hour, we have this higher low and we have this higher high. So this is our higher low. This is our range. So price has not broken that range. Price has not broken that range. So it just swept liquidity, as you can see, right? It swept liquidity and it didn't break that range. So now we'll go to 1 hour. So now on 1 hour we have something else. On 1 hour we have this low and we have this high, right? That price has not broken. Price has broken that range. All right. So price has broken this range on 1 hour, right? It has broken this range, breakout structure. So now we'll now go to 15 minutes to look for a good range to buy from. That's how we do the analysis right here. So now we look at 15 minutes range. 15 minutes range, we have this low that is creating a high, right? We have this low, we have this high, the price has broken, right? BOS, breakout structure. So now we're waiting for price to pull into this imbalance here for us to buy, right? That's what we're gonna do now. And that's gonna enable us to continue our bullish trend because 4 hour time frame is bullish. Price has pulled back into the higher low, right? So now we just wait. Let me put on my bias. Okay. So this is Tuesday. Now this is Wednesday, right? So Monday came down, Tuesday manipulated lows, broke back up. On 4 hour time frame, this is not a breakout structure. On 15 minutes right now, it looks like a breakout structure, but it's not actually a breakout structure, right? So it just manipulated lows, broke back up. 1 hour has broken structure, and now we're looking at a 15 minute um entry zone. So now we put our entry right here. Stop loss just below the higher low, right? And TP 1 to 2.5. But we're expecting price on the higher time frame, which is this red, to create a new higher high, right? Expecting it to create a new higher high. So you see, price came, tapped us in, and just pushed up. So now what you are looking at, right? What you are looking at is the 15 minutes after creating a higher high, came back down to create a higher low, right? And then it has gone now to create a new higher high. So while while on the 4 hour we have higher high, higher low to higher high, right? On 15 minutes, what we're going to have, this is the directional trend, directional range. The directional range will be on 4 hour, a higher time frame. And then on lower time frame, which is this blue, you start seeing retracement, retracement, lower low, lower high. It is in a bearish trend, right? It is in a bearish trend, but you see price always coming to the higher low of the higher time frame. And then after it comes to the higher low of the higher time frame, what do you observe? You observe a break of structure, you see? And then price comes back down to keep breaking. Now it is now in a bullish trend. So from the 15 minutes coming down in a bearish trend, it has changed after coming into the higher low of the higher time frame trend. It has changed into a bullish trend. right? So you can identify sweep of liquidity and whatever you want to identify. You can even see an imbalance right here. But after changing trend, it is now bullish. You understand? It is now bullish. Now you know your target is for price to take this high in order for it to create a new higher high. So why on the 15-minute time frame, you catch every higher high, higher low, you buy from every higher low to go and create a new higher highs. You understand? So this is how you trade with a range, and this is just how it is. It is so simple and easy. It is just about identifying your range properly. You understand? If you're able to identify your range properly, if you're able to this is order flow, right? In order for this market to come down or up, it has to always break a range. It has to always break structure. You understand? But it needs a higher time frame, directional buyer. This is what we tell the market who is in charge, right? This directional buyer, this 4 hour range is telling the market lower time frame that we are going up. So in as much as it is coming down, the law is that it must not break this law. It is a law. The law does not fail. You must trust that the law is a law. You understand? When it breaks this, the law is that it wants to be buried because there are buyers at this bottom that are holding this position. So if sellers manage to break this position, then all that is saying is that there is not enough sell buyers in this zone to push the market. That's just all what is trying. That's what all what it means. Now, Wednesday, just if you didn't trade on Monday, Tuesday gave swept the low, right? Created the low of the weekly candle and has broken back structure. And then on Wednesday gave a very clean entry around 115. So this is just New York session, and then your trade just came in on New York session, which is it's just perfect, right? It's just perfect. So this is gonna be all for now. I don't want to spend too much time. I don't want to make these videos very long, but I'm gonna be back testing once in a while like this, and then you guys would see how I get my trade, how so when I post my signal, you guys can have the confidence to execute such trades. But then again, if you want to learn more about CROT, supply and demand, ranges, Wyckoff theory, just send me a DM because there are different strategy, and to be honest, if you the more you know about this strategy, the easier it is for you. For instance, this is the Wyckoff accumulation schematic playing out right here. And if you are familiar with Wyckoff schematic, right? If you are familiar with Wyckoff schematic, you'll be able to quickly identify to say, oh, all right, I think the market is turning right here, right? So coupled with the fact that this is a higher low, Wyckoff schematic, break of structure and all of that, you catch the trend and you're in the right direction of the market. So I also offer mentorship. I also offer trading coach. I give psychological lessons for trading because you trade what you believe most of the time and not your strategy. Most of the time, we come into the market having the mindset that the market is going to sell today. You understand? You don't come to the market to say, "Oh, let me see what price is doing." You come with a clean mind. But a lot of people, what they do is, if the market has gone up, Monday, Tuesday, Wednesday, they say, "Okay, Tuesday, Wednesday, Thursday, Friday is going to sell." You have to not have any expectation. Just come, mark your range. If look for your CROTs or whatever your strategy is, and then trade. But if you have a perspective where you are trading what you are thinking and not what the market is showing you, you're in trouble. So I give psychological lessons. I have a few traders who I mentor, and they are doing very well because this is one of the main reasons why a lot of traders struggle with trading. It's not because they are not good, it's not because of capital, it's just because you are not using the right frame of mind to trade. If you think capital is your problem, right, you would get enough capital one day, but you still keep messing up. If you cannot trade a small account, you cannot trade a bigger account. Don't deceive yourself telling yourself you need capital. The truth is that you have no self-control, and you trade what you think rather than what the market is showing you. You understand what I'm trying to say? So hit me up if you need psychological mentoring, if you need a coach, a trading coach, because trading is also a performance game, right? It's like a sport. This month you might perform well, next month you might not perform well. And this is also because we have life situations happening to us every day. And no matter how advanced you are as a trader, it is a performance game. Whereas if you are having some challenges in other aspects of your life and you come and trade, it might affect you psychologically and you will not know. If you're not somebody that is conscious or somebody that knows how to, you know, get yourself in the zone, or if you're not somebody that knows that have mastered themselves, then you don't know how to get yourself out of this shit, right? Something might happen in your house that makes you angry. Something might happen at your place of work that makes you angry. And if in that point in time you are actually now trading, your mind is already messed up and you might not know when you self-sabotage yourself, right? So you actually need a trading coach. There is no performance industry in the world where you see an athlete or somebody that is actually a top athlete, right? And he doesn't have a coach. Why? Because your job is to focus on performing and you need a coach, somebody that can tell you how to do what to do. And all you have to do is just do those things because at the end of the day, you just want to make money, right? But yeah, I'm a psychology coach too. So hit me up, and let's work together. I'm looking forward to working with some of you guys, right? All right. Have a nice day, guys. I hope you guys enjoyed my back testing for today. Like I said, once in a while, I'm going to be back testing more structures like this for you guys and showing you guys how to trade, how to catch trade like this. And so that's it. Like my YouTube channel, follow my YouTube channel. And if you find value, please always do come back. I'm going to be sharing more things, more psychological tricks for you guys to trade successfully. Have a nice weekend.